I'm John Prasinos, Editorial Director of Investing Daily, with a video presentation for Monday, September 27. Well, despite an overseas debt crisis, COVID, Delta, the Federal Reserve's imminent tapering, even a looming government shutdown, stocks keep going up. You know, I'm reminded of a cliché in Hollywood action movies when the villain says in Exasperation to the resourceful hero, "You just won't die." Likewise, this bull market seems unkillable. Stocks rebounded after a sharp sell-off earlier in the week to eke out a weekly gain. Fears about the pandemic and the debt woes of China-based real estate giant China Evergrande Group were offset by reassuring announcements from the Federal Reserve after its two-day Federal Open Market Committee meeting. Fed Chief Jerome Powell and his cohorts made it clear that yes, the tapering of asset purchases would soon begin, but the Fed reiterated its commitment to shoring up the economy and markets. The prospect of taper light, as you might call it, didn't faze investors. U.S. and international stocks finished in positive territory last week, despite all the risks and mounting dangers. See the following table. The Fed's taper talk gave stocks a boost of adrenaline. Economically sensitive cyclical companies and sectors rallied last week, with financials and energy leading the way. Small caps also outperformed, a sign of economic optimism. As for Evergrande Group, well, it's likely that Beijing will step in and engineer some sort of bailout. The stakes are too high to simply let the vast real estate conglomerate go belly up. The fact that Chinese equities did not sink to a new 52-week low last week, and that emerging market benchmarks stayed roughly in tandem with the S&P 500 despite the dire headlines, reflects expectations that a Chinese government rescue combined with stimulus is in the cards. The backdrop is favorable for continued appreciation of U.S. and global equities. The bull market is still very much alive. In the U.S. in particular, interest rates hover at historic lows and monetary stimulus remains in place. Fiscal stimulus could be in the works as well if President Biden is able to rein in the centrist Democrats who threaten to blow up his agenda. Republicans, of course, remain uniformly opposed. What's more, corporate earnings growth is on track for robust growth for Q3 and the rest of 2021. See the following chart. For the third quarter of 2021, the estimated earnings growth rate for the S&P 500 is 27.6%. The estimated earnings growth for the S&P 500 for calendar year 2021 is 42.6%. Recent bearishness has subsided, and Wall Street analysts are increasingly optimistic that the stock market will continue rising for the duration of 2021, but it'll be bumpy along the way. With the end of Q3 looming on the calendar, which sectors are currying the most favor right now with analysts? Overall, there are 10,537 ratings on stocks in the S&P 500. Among these ratings, 56.9% are buy, 36.8% are hold, and 6.2% are sell as of September 24, according to data from the research firm FactSet. Analysts are the most optimistic about the energy, communication services, information technology, and healthcare sectors. Analysts are most pessimistic about consumer staples. To be sure, many investors, they're wringing their hands about high valuations, and it's true, a handful of market leaders are pricey, especially mega-cap tech stocks. But overall, the forward 12-month price-to-earnings ratio for the S&P 500 is 20.8, which isn't out of line with earnings growth projections. The underlying fundamentals I've just described indicate that stocks are still the best investment game in town. Well, that does it for now. For further details, consult my article that accompanies this video on the Investing Daily website. Also, check my article for a new offer from Investing Daily, a publication called Personal Finance Pro. If you have any comments or questions, send an email to mailbag@investingdaily.com. Thanks for watching. Stay invested and stay safe.